Okay. Go ahead.
Good afternoon, everyone. Welcome, and I hope everyone's having a terrific day. We are here today with Doreen and Inserra, who will be presenting the Developing Your Tax Office Written Security Plan session today. And Doreen is a owner of Doreen and Inserra CPA since 1997. She is extremely active in the CPA community, also having won the Lou Miller Award from the Chamber of Commerce in 2014, I believe. She's also a past president of the New York State Society of CPAs and is a member of many other organizations that require a lot of alphabet after her name. So I'll let her talk a little bit about that. But I will now pass the session over to Doreen.
Thank you, Gina. So today we're going to be talking about a very important topic, developing your tax office written security plan. It also could be related to a non-tax office. We talked earlier today about the New York State SHIELD Act. We're going to have some of that in here as well. And for those that are looking for CE or CPE, we're going to have 4 polling questions every 10 minutes or so. So keep in mind of what I'm asking. Again, my name is Doreen and Inserra. We're going to cover safeguarding taxpayer data and personally identifiable information of your tax office and your business, as well as the New York State SHIELD Act, the Stop Hacks and Improve Electronic Data Security Act, and the Small Business Guide for Cybersecurity in New York State. We're also going to go over a template for you to use to help you develop that plan. I am a CPA. I'm in practice almost 25 years here in Staten Island. I have a certified government financial manager certificate, as well as a cybersecurity advisory services certificate issued through the AICPA. So I always like to keep up what's going on in the news, what's happening in Washington, and of course, what's happening in the accounting field. The Journal of Accountancy in this area reported that cybersecurity breaches are estimated to cost businesses around the world up to $1.5 trillion annually. And if breached, each record in your system could cost about $150, and we have an average of 25,575 records if a breach occurs. So it's highly recommended that you do strategic pruning in your practice, that you keep in mind and delete those old irrelevant data files, give back original files, don't maintain information past your retention policy, and have a written retention plan. In addition, throughout the day, we talked about healthcare. That's an industry that's being targeted by cyber criminals. Late in October, the FBI and 2 federal agencies said that they had credible information on an increased and imminent cybersecurity threat to US hospitals. In fact, in Germany, an IT system failure from a breach forced a critically ill patient to be routed to a hospital to another city. Other facilities, about 250 under Universal Healthcare Services, also had their system halted, and they had to resort to paper and pencil for record-keeping purposes. So these criminals, the bad guys, the bad gals, smell the problem, and you want to focus on the weaknesses in your system. Today, we're working virtually, so we need to protect the tax data at home and at work if we're a tax practitioner, or if we're a regular business. Our data is an asset, and that's being considered these days. You don't want your business to halt because your information has been held hostage. So this came about because in late July of 2017 in New York State, one of the 3 main credit reporting agencies, Equifax, experienced a major data breach, which involved personally identifiable information. With that, they made a settlement with New York State, which was announced at a $19.2 million settlement requiring financial reporting for customers and free annual credit reports. And on a smaller scale, this could happen to a closely held business or small business, medium-sized business, it doesn't matter. In late July of 2019, 2 years later, the governor signed 2 cybersecurity bills, one being the SHIELD Act, as we said, the other being the Identity Theft Prevention and Mitigation Services to Consumers Act. And with that act, it now defines what New York State's data breach notification law is. also broadened the scope of information covered under the notification law to include what we use for advertising purposes and targeting our markets, biometric information relating to or involving the application of statistical analysis in our systems when we advertise for our business, which includes physical or behavioral human characteristics. So it's just not your normal email addresses. It includes that name, address, passwords, social security numbers. If we hold driver's license information, we must protect the information from unauthorized access. In addition, it updates the notification requirements on the New York State level. Generally, that's 72 hours. On the IRS level, if you're a tax practitioner or state taxing authorities, generally is 24 hours, and you would go to your IRS stakeholder liaison and state tax administrators. And in addition, it expands the definition of the breach, as we said, and requires reasonable data security requirements tailored to the size of your business. So we're going to talk about how we develop that plan. In New York State, this bill is effective March 21st, 2020. So actually came about during when the pandemic occurred. And now you want to make sure that you're implementing this legislation. What exemptions are included under the New York State SHIELD Act? Well, if we're covered under another type of act, for example, let's say we're an insurance agent and we're covered under New York Division of Financial Services, or we are tax practitioners like ourselves, or financial institutions, we're covered under Graham-Leach-Bliley Act, GLBA. For the healthcare providers, it's the Healthcare Insurance Portability and Accountability Act, or HIPAA. You're then covered under those legislation, and disclosure would come under those requirements. You may circle around and then end up getting reported to the New York State Attorney General's if there is a breach, but you want to make sure that you're following the legislation that you're under. If a data breach occurs under the New York State SHIELD Act, after March 21st, the New York State Attorney General's office can impose injunctive relief and civil penalties of up to $5,000. So we want to make sure that we create this reasonable data security requirements in our business, in our tax practice, to make sure we adhere to all these requirements. The SHIELD Act broadens the definition of data breach to include unauthorized person access, which means we have to make sure that we know our staff, just like we need to know our customer. We know who we're hiring. We do background checks if required, and we only allow information to be released in our system on a need-to-know basis. It imposes stronger obligations on businesses handling private data and how you collect that information, the type of information that it is. So with that, we're going to go over the Small Business Guide to Cybersecurity in New York State. And it has 10 internal controls that you should adhere to. And when you adhere to this, you'll see that you'll be falling into the other requirements under the Federal Trade Commission, under the GLBA Act, the Graham-Leach-Bliley Act. Now, the reason why all this legislation under cybersecurity has come about is because studies have indicated that at least half of confirmed data breaches targeted small businesses, and as many as 60% of those businesses went out of business within 6 months of the cyber attack. And despite this, only 50% of small and medium-sized businesses have secure company email to prevent the phishing attack, which is the most common. And only 10% of such businesses have taken basic steps to protect customer information. Remember, no business is too small or too large to have a breach. And so without a data security plan and essential protections like strong passwords and antivirus software, you not only place your business at risk, but potentially your consumers, your customers, and other businesses in your community as well. So Ryan, do we have our first polling question?
Yes, launching the first poll now.
That's what I thought.
Okay. What security act took effect in New York State on March 21st, 2020? The SHIELD Act, Identity Theft Prevention and Mitigation Services Act, the Taxpayer First Act of 2019, or the New York State Privacy Act? You need to answer the polling question so that we know that you're participating. What Security Act took effect in New York State on March 21st, 2020? And how many seconds do we have for that? Ryan?
We've gone about a minute here.
Okay, so you can let that.
All right.
Okay, so the answer is the SHIELD Act, which we just went over. The Identity Theft Prevention and Mitigation Services Act has to do with credit card companies. The Taxpayer First Act of 2019 actually is legislation for the IRS to track an identity theft case through its system and identify who the perpetrator is, and then they will contact the taxpayer. And a preparer could get swooped into that. So you got to be very careful. And then the New York State Privacy Act, we're going to cover later. So that we could close. Okay. So what's at stake if I'm breached or my business is breached? The reputation, of course, of your business and yourself. Your business information is then possibly frozen or halted, maybe hijacked, and you are at halted operations, right? So you want to make sure that this information is protected. You will have investigatory costs as well once you have the breach, as well as legal costs. Now, in 2016, hackers breached half of all US small businesses, and over half of attacked companies go out of business within 6 months, because remember what we said, it costs about $150 a record with an average of over 25,000 records per incident. Okay, got a little freeze there. So what can I do about that if I'm running my business or my tax practice? Public companies these days are actually spending about or budgeting $3,500 per staff member with regards to cybersecurity. So you may want to think of that on a smaller scale, set some funds aside and budget for that, but you can also implement some internal controls that may not cost too much. You don't have to spend a great deal of time or money. However, when you write your plan, you want to focus on where the weaknesses are. So you got to measure the risk. So let's go over the 10 internal controls that the New York State Attorney General's office recommends that we implement into our systems. The first one has to do with passwords. And of course, the password length is very important. And you must have different passwords on different pieces of equipment that you use or systems that you use throughout the office. And also, you don't want to repeat passwords. You don't want to use passwords that are out on social media, and you don't want to use common or birthdays and things like that, because if you keep them short, they could be hacked very quickly. Could take 6 seconds. So you want to make them as long as possible, 10 to 12 characters mixed, uppercase, lowercase, acronyms, etc. And use a password manager, because you're not expected to remember all these. You don't want to put them on your laptops and monitor in your notes in your cell phone. You want them to be separate from access. You can also have more tips at ftc.gov in this area on maintaining strong passwords and your password manager. Step 2, install and maintain antivirus firewall programs. And like the pandemic or the COVID crisis or the flu virus, a computer virus spreads from computer to computer, replicating itself and weakening the immune system of your computer system. So you want to have that antivirus updated in your system. That helps to scan the contents of the files you download to determine whether they pose a risk. And many computers include this, but you want to make sure that you're paying for the software, you're not using free software, and that it's updated. In addition, firewalls are like a bouncer of your network. You want to also have them on your routers, not just on your hardware, and anywhere where you need to prevent that access. In fact, I use a Porter Power data blocker when you're in the public domain, so that when you want to charge a piece of equipment, you are preventing someone from being able to access that item. Step 3, delete old files and accounts. Hackers can't steal sensitive information if it's not there, as we said earlier. You want to strategically prune. You want to follow your retention policy. If it's 4 years for payroll returns, you only keep that, and so on. If it's 6 years in New York State to maintain or under the Public Accountancy Board, you keep that. Or depending on the type of business that you are under, you want to follow that policy. Same thing with emails. Limit access to sensitive data. Carefully manage who is using that data. For example, you may want to prohibit access to employee tax files. You separate and do the segregation of duties. You have a sales unit that will use only that information in your system. You will have an accounting department. You'll have human resources. They all have separate areas, and you don't want to make it 100% open. Just have it available on a need-to-know basis. And for highly sensitive information like Social Security numbers, consider implementing encryption. Encryption transforms information from one form to another so that it can't be read from an outsider. In addition, your websites should be secure. HTTPS for secure, and you should be only using those websites, especially for sensitive information. Step 5, be cautious with email attachments and downloads. You don't want to click if you don't recognize the sender. If you see gobbledygook in the subject, if you see an urgency, if they're asking for private information or funds. There are instances, especially in cases where you have escrow agreements, where you may get a spoofed email asking for funds from you, from your bank account. Do not respond to those. Also check the spelling. This is an example of a scam email. You want to stop, you want to hover over it, you want to read it. Cyber criminals often use web addresses that resemble the names of well-known companies, but are slightly altered. For example, Google could be Google with 3 O's as opposed to 2, or Microsoft with none. And if you act swiftly, your eyes tend to fix the incorrect spelling. So you want to hover, see where it's going to. If it's not a secure site, you want to contact the company that it's coming from and see if it's legitimate. Internal control number 6 is back up all files and software. Of course, this is common sense, and you should be doing it as often as you're working in the office or not wanting to replace that information. So if it's daily, you will back up daily. You can back up to the cloud. Of course, you want to encrypt first and then back up, and that will help you have a continuity plan. In addition, you can use a backup that could be taken off premises as well and stored safely. That external hard drive, secure cloud computing service, and you need to vet these particular devices and companies that you're going to use. Internal control number 7, establish network security and access control. You want to lock down your computers, limit access to devices, right, with the network password management. Instruct employees to disconnect from the internet by turning off their computer when it's not in use. And if they're working from home into your system, you want them to have a virtual private network. You consider multi-factor authentication. Later on, we're going to see that the Federal Trade Commission, which CPAs, EAs, PAs, and tax practitioners are under, are going to require encryption at rest. That's something that's on the table. So in addition, if you have a wireless network in your office, you want to have a guest network, and you want to have your normal network, your business network, keep them separately. If you're in the financial advisory arena, you want to keep that separate as well. All these have different requirements. And the ranges should be shortened, and you should be using the most secure encryption, WPA2, at the time of this manual. Internal control number 8, establish a physical access control for all computer equipment that you have. Now later I'm going to show you a template, and you'll see that you should be inventorying your equipment, inventorying your software, inventorying what is on those systems that could be accessed, and prioritizing them, and also recording who's using those systems and when and where are they located. Update your software, number 9, update your hardware, apply your patches as often as they come. In the case of the WannaCry ransomware attack case study, there was a worldwide cyber attack by the WannaCry ransomware crypto worm. And that was running on systems, even though Microsoft had a patch, not everyone updated their systems with the patch. So it affected more than 200,000 computers across 150 countries. That ranged to damages of millions to billions. Internal control number 10, get tech help when needed. Now, you don't necessarily have to have an IT person, but it's always suggested for your business to provide you the networking that you need and the protections that you need. But you need also someone who knows cybersecurity. And so you want to have that professional as well. Later, we'll talk about disclosure and how you should retain a forensic consultant. That's separate than your tech assistance during regular operating procedures. So what happens if we are breached? Well, we first should contain the breach. It's number 2 on this slide. I think that's the most important for us. Take all affected computer equipment offline immediately. Closely monitor all digital entry and exit points, especially those involved in the breach. And then put up the new system, the new computers, new usernames and passwords so that that hacker is removed from that system, because some of them could have keyloggers tracking your system and stay in your system for a year or so. If you listen to IRS criminal investigation scenarios, they have found that. You want to then are required to, of course, disclose the breach, but you first have to investigate the breach. And that's when you have your forensic expert. With that, prior to hiring that forensic expert, you will need to hire a legal counsel. And of course, if you have cyber insurance, contact your insurance carrier. And your legal counsel should then hire the forensic consultant. So it's covered under privilege, and it's specifically for this particular event and not just regular operating procedures. You're going to notify the relevant parties. And those are, yes, you're going to notify the consumers, but first you have to notify those parties under your legislation. That would be law enforcement. If you're a tax practitioner, that would be the IRS stakeholder liaison. They're going to check your CAF and your ETHA numbers. They will help to determine should you be reporting to the FBI, in certain cases CIA. Sometimes the local law enforcement is not aware about cyber crimes and how to handle them. On Staten Island, the district attorneys of Richmond County has the Economic Crimes Bureau. So that is a good contact and resource for information. After speaking with your counsel, you want to notify consumers and have public relations. You may need a public relations firm to determine how you're taking care of the breach. And with that, you would then have a letter that you're going to provide to your consumer, again, reviewed by your legal counsel. And this is offered by New York State Department of State as a sample in disclosing what has happened. And you also want to help your customers. You're going to provide credit reporting, credit monitoring services, more than likely for free, and freeze of credit. So let's just rehash the requirements under the New York State Shield Act for a business that is dealing with residents in New York State. You can be a New York State company or outside of New York State. But if you're dealing with consumers in New York State, you need to follow these procedures. Develop controls and procedures to address data privacy risk in your hardware, in your email. Have a written security plan identifying the responsible party or security officer. Monitor, expand, train the related data privacy issues to your staff and yourself as owners. Monitor and evaluate the written security plan, especially with developments regarding the New York Data Privacy Act. That's in the Assembly right now, but that's covering the de-identifying of information. We'll talk about that a little bit later. And hiring a cybersecurity expert and IT provider to do vulnerability penetration testing of your system with a written report. You want to cite your weaknesses, you want to have recommendations, you want to document this, implement, and do it annually so that if you have to provide it to government agencies or taxing authorities, if a breach occurs, you can prove that the negligence was, you tried to minimize negligence and it wasn't on your, based on your own negligence by ignoring the procedures that are required. So this slide shows the AICPA's 22 cybersecurity best practices. And of course, in this list, it's developed a breach response plan as well as a written security plan, amongst others. A lot of them all the same, but they all have their different venue about it. With that, Ryan, do we have our second polling question?
Yes. Poll number 2 is launched.
So how many ransomware attacks are there expected to be per minute? How many ransomware attacks are there expected to be per minute? 7, 5.5, 10, or 3.5? Give you a few seconds. So there's expected to be 5.5 ransomware attacks per minute, costing about $11.5 billion annually. So that's the second bullet, 5.5. Okay. And that's the answer to that. Okay, since this presentation is geared towards professional tax preparers, you're reminded in the National Law Review, it's also recommended, you need a written information security plan. In addition, upcoming, you're going to be registering for your PTINs. And with regards to that, you need, to IRS, subject to penalties of perjury, to click whether you have a written security plan. And right now, they're not asking for a copy of the security plan, but it could be in the future where they may be asking for that. And so you want to make sure if you're going to be clicking yes, and you're going to go into tax season, that you have that plan in place and that plan is tested. Remember, we're covered under the Financial Services Modernization Act of 1999, also known as the Gramm-Leach-Bliley Act. And some of the states that we work with on our system, if we have a breach, we may need to also disclose and go to those states to disclose that the breach occurred. So you need to have this written plan in place. Some of these states include California, Colorado, Florida, Illinois, Massachusetts, New York, and Oregon. So let's just do a rehash of the 6 security requirements under taxes security together: antivirus software, firewalls, two-factor authentication, backup software services, drive encryption, and a virtual private network, especially if you're working from home going into the operating system of the office, okay? That's an encrypted network. And that's suggested highly as the 6 basic protections by the Internal Revenue Service. And if you're an e-file provider, professional tax preparers that fail to take these steps can expose themselves to an FTC investigation and violation of their obligations as authorized IRS e-file providers under IRS Revenue Procedure 2007-40. So you need to create that data theft response plan, especially under the Taxpayer First Act of 2019, where if there is an identity theft, it's going to be reported to your client. In fact, software companies are working with the IRS Security Summit to report irregularities in the software if they see that when you're working on your systems. So you should report the crime to the IRS. You should be expediting those reports. You should be collecting your information, any breaches, and that should be within 24 hours. Most states require that the state attorney general be notified of data breaches, as we said earlier, which would be under that New York State SHIELD Act. This notification process may involve multiple offices, and also you're going to report to the state tax administrators. Also, tax professionals should be, during the year, checking their PTINs, their EFINs for electronic filing purposes, and CAF numbers, power of attorneys. You want to make sure that there's no fraudulent activities or more filings than you have actually done work for, right? You want to cancel any power of attorneys when you're finished working with them. And this you're required to do under Circular 230 practitioners, which could be tax attorneys, it could be CPAs, it could be also appraisers, it could be certified retirement authenticators. So we want to make sure that you're following these procedures so that they don't shut down your numbers. Now in New York State, in addition to the SHIELD Act, we also have the New York Privacy Act that's in the pipeline. And this act covers how we need, as a small business, or as a medium-sized business or a tax practitioner, to de-identify personal information that we have access to and that is in our system, and what type of safeguards around that data sharing that we are encompassing in our businesses to allow consumers to obtain this information that they provide to us, okay? So that they know it is secure, all right? Under this act, the reason why it was put into place was there was a Pew survey from 2018, where 69% of American adults use at least one social media platform. And that was up from 5% in 2005. A later, or earlier rather, 2014 Pew survey found that 91% of Americans believe that people have lost control over how their personal information is collected and used. And so this act is surfacing now to protect this information. Lawyers have their own professional confidentiality issues. We have the GLB Act, and now in New York State, we may have the Privacy Act. In addition, under the Federal Trade Commission Privacy Act, we need to understand what the difference between non-public information and personally identifiable information is. So the privacy rule under the FTC protects a consumer's non-public personal information, NPI. And NPI is any personally identifiable financial information, otherwise known as PII, that a financial institution collects. And so we say, well, we're not a financial institution, so we don't need to worry about this. But if we collect names, addresses, income, I'm going to say social security numbers, usually the tax practitioners will do that, or other information on applications for loans, accounts receivable, customer account numbers, payment history, deposit balances, credit and debit card information, we are subject to this FTC privacy rule and need to understand the difference between NPI, PII, and what is neither of those, so that we know that we're doing our strategic pruning and we're understanding the data that is in our system. So let me give you an example of what publicly available information is and what it's not. Telephone numbers are listed in a public telephone directory. An individual can elect to have an unlisted number, and in that case, that phone number would not be publicly available. So if you have that on your system and then you are offering that out to the public with a name and address without permission from the client, you have now breached that safeguard, okay? So publicly available information includes federal, state, or local government records made available to the public, such as that an individual has a mortgage. If you go to the county clerk's office, that's available. Just recently, the New York City Department of Finance started doing electronic recording and requiring it as early as December 2017 for Richmond County, and for all boroughs now, to be able to inform the property owners if there's a change of ownership, so that it could prevent fraud. And we'll talk, I have a few slides on that later on. But examples of non-public personal information is, let's say, for example, a list of retailers' credit card customers. You need to protect that. List of a payday lenders' customers. List of auto loan customers, okay? These all are non-public information. And even if your business is not a financial institution that has consumers or customers, the privacy rule may limit your use of this NPI. Your ability to reuse, to redisclose the information may be restricted. And if you receive NPI from a non-affiliated financial institution, you may have limits of use on that as well. So for tax practitioners, we have section 6713 and 7216, where we have to get consent from our clients for disclosure or use of information by preparers. If you're the preparer of the return, you must get their permission. Let's say if a mortgage company wants a letter, a CPA letter, you need to get permission. They must have that permission on file, and they suggest that you do that at the beginning of tax season because you're not permitted to be compensated and also have this letter signed off. So you have to be careful of who discloses that information furnished to him or her as a practitioner in connection with preparation of the return. Because there is penalties, of course, for that. And under the Taxpayer First Act of 2019, those penalties have been increased from an annual limit of $10,000 to $50,000. And that's not your negligent penalty. That's just making a mistake of releasing or disclosing this information without the taxpayer's permission. I say sometimes at presentations, if you're a financial advisor, you need to get these consents on file because you can mistakenly be recommending, let's say, an IRA, and you are acting in the financial advisory mode, and you're not acting in the accountant mode, and you could accidentally be disclosing this information without the client's permission. In addition, under Section 7216, that's a little bit more harsh. If you knowingly or recklessly release this, disclose and use this information, you could be subject to a misdemeanor and also be fined up to $100,000 within a year. So you want to make sure that you are providing your due diligence when you have this type of information in your system. In fact, the Federal Trade Commission, which practitioners are covered under, and some other types of businesses should be aware of this, they're expanding the requirement that customer information to be encrypted, both in transit and at rest. At rest is not in place right now, and it could be in the near future. They also will be requiring implementation of multi-factor authentication. We see the IRS suggests that highly for any individual accessing customer information. Requiring information systems to include audit trails so that we can easily identify, no need to bring that forensic consultant in to try to find where the entry happened to respond to a security event. And require that financial institutions establish incident response plans, as well as safe disposal of customer information, right? We want to purge this information. As we said, we don't want to keep it on file if we don't need to. Here is the citation of the ruling with regards to the New York City Department of Finance City Register for Richmond County, which was effective December 13th of 2017. And it requires the electronic recording of various types of transactions that can go on in the city register. And this is to help prevent fraudulent documents being completed correctly and probably acknowledged and notarized and having to be accepted, even though that was a fraudulent transaction. And so this is helping to reduce real estate fraud, including deed and mortgage fraud. They'll have an email address on file for the property owner, and the property owner will be informed of that transaction before it is finalized. Property owners can opt out. I don't see why they would, but there is a provision for that if they don't want to be part of that program. And this is part of the list of the types of activities that can go on that could affect property owners' information on the system. So you see mortgages and satisfactions and sundries and the selling of your property. So you want to be, you want to make sure as a practitioner that your clients are aware and your customers are protected with regards to this, especially if you're also in the title company business as well. You will be subject to the Federal Trade Commission as well as mortgage companies. So it's a slew, not just financial institutions. There is a link here, but the Department of Finance's notification includes a recommendation for registrants to check the Automated City Register Information System, which is known as a SCRI, to help fraudulent, erroneous, or invalid transactions. And in addition, the Department of Finance's first report was released on September 30th, 2018, analyzing these transactions. And the city register referred 20 cases to the sheriff's office. The sheriff's office did not receive any referrals from the Richmond County clerk, which is great. So there wasn't any fraudulent cases there, but it is being monitored. In addition, for those that deal with trusts and estates, you want to verify the beneficiaries that you are allowing distributions to occur to. That's something the trustee is responsible for, and that would fall under this provision. So as a practitioner, you want to protect your client, protect yourself, and here's the 5-step solution. 1, take responsibility or assign an individual or individuals to be responsible for safeguards in your office. So right now, write down who that responsible party would be. Assess the weaknesses. You could actually go to publication 4557. That's a checklist for practitioners. It also could be available for small businesses to help you determine where the weaknesses may be in your system with regard to MPI and or PII. This could be your physical environment, your computer systems, and what type of authorization that you give to your employees, and the locations of that taxpayer or personal information in computers, filing cabinets, confidential storage cabinets. You want to mark what is confidential and what isn't. Write a plan of how you will safeguard this information and put the safeguards in place, test them, implement them, and follow the FTC safeguards rule. I, in fact, give not only a privacy policy, but I also give a publication 4524, which is a one single sheet that alerts what the consumer, what the client should be doing to protect their systems, because they could expose us to a breach. And so we want to make sure that they're doing their cybersecurity hygiene. If you go to ftc.gov, you will see fact sheets on this, and that is very helpful. Here's that publication 4557 and also publication 5293, which summarizes what a tax practitioner should do in their practice. So Ryan, should we do the next polling question?
Yes. Poll number 3. There you go.
Okay. So what should you implement under the SHIELD Act? A business plan, safety construction plan, audit plan, or written security plan? Take a few seconds. Which plan should you implement under the SHIELD Act? And so that is a written security plan. Okay, business plan is when you are planning to do activities with your business and targeting a market. The written security plan helps you protect that information. Of course, the audit plan is when you're coming in to look at the operations of business. Okay. So, as we said, we're going to designate one or more employees to coordinate its information and security program, identify and access the risks to customer information, and design and implement safeguards. Select service providers that can maintain appropriate safeguards, and consider drive encryption and the virtual private network. So my thing popped off here, so let's go back. So when you're checking your EFINs or your PTINs and your power of attorneys, if you find that your PTIN is being, more filings are being recorded than you actually filed returns for, you can complete a form 14157 return preparer complaint and submit that, and they will do research on that and help you cure your PTIN and make sure that there's no fraudulent activity. Because there was a time when IRS didn't have control of this, and actually you would be filing and someone else could have filed that return and there would be a kickback of that return. So now they're trying to monitor where PTINs and EFINs are being taken advantage of. If you hire a service provider, later we'll talk about a consultant. When signing a contract with a service provider, the business should make sure the contract requires the provider to maintain safeguards and confidentiality under the same safeguards that you're required to offer and to follow. The program should be regularly evaluated and adjusted as time goes on, and it should be flexible. As we said, you should be safeguarding that taxpayer data. You should watch to make sure that you're not in violation of the FTC and safeguards rule and Rev Proc 2007-40 for your tax practitioners. In addition, no matter if you're a tax practitioner or just a regular business, other than a practitioner, your financial safety is an important part of a disaster preparedness plan. Before a natural disaster, a hurricane, in this case, cybersecurity breaches, COVID-19, disaster strikes of some kind, taxpayers are encouraged and practitioners to be prepared. And this includes developing plans to protect your data and create electronic copies of documents and make sure you're doing that regularly. Hire that cybersecurity professional, and if you do, talk to other business owners or professionals you know and trust for recommendations and references. Ultimately, select the person you trust most and feel comfortable with. Ask questions, do your due diligence. Ask, for example, how does ransomware work? What are the best options to securely back up data? Do you have suggestions regarding disaster recovery? Have you ever created a security plan? When hiring a cybersecurity professional, secure an agreement or engagement letter to ensure that both parties understand the terms of the agreement. So to finish off this presentation right before our last polling, we're going to look at a template for a tax or small business office security plan. And what the template first does is ask, of course, who are the contacts and who is the responsible security officer? In addition, who are the employees in the business and what are their responsibilities in the system? Later on, you'll see it completed in. You also want to identify the type of information that your business holds. What would it cost if that information was revealed under confidentiality provisions? What would it cost to verify that information for integrity and lost access to that information? And you go through each of those, we'll show you later. You do your high, medium, or lows. In addition, you're going to do an inventory of your equipment. You put in your make, model, and serial number of the devices or the hardware that you have, the software that you have, the location, the type of information that is stored, and what the potential impact of that information was breached. In addition, you want to assess what types of threats and vulnerabilities that you may have in your business. We talked about spear phishing. We talked about regular phishing. These types of emails that could be sent to your staff and they're not aware of that particular type of criminal activity, they may fall for it. So you want to see which is the most highest level of percentage that you would get in your business for a particular activity. Could it be just an accidental disclosure? Could I have mailed my USB drive in an envelope and it didn't get to the client? You know, all that type of thing that you want to assess and see where the weaknesses are and how you prioritize the fixes. The system owner and the security officer is the one that must be notified immediately of a breach. And that is the person who's going to start collecting the information to do the reporting of the breach. And you're going to circulate this through the office and have sign off so that everyone is aware of what the penalties are if a breach occurs. So this is an example of a plan that is filled out as we see. Information that's required, you determine the medium, high, or low of particular information. For example, customer contact information, if that got out, what is the repercussions of that based on each of these types of areas, the confidentiality of it as well. We may have something that's low. For example, if some firm employee information got out, but it wasn't tax information, you might need to do some customer relations, talk to the employee and so on. So in addition, when we do our inventory, for example, cell phones, office PCs, laptops, where's my Wi-Fi printer, my network router. You want to indicate where they're located and what is on those systems. My client emails, tax returns, financial statements, which is also considered taxpayer and protected information. You want to make sure you know where it is, and if there was a breach, what would happen, and what is the overall potential impact of that. As we said, you're going to identify what if there's accidental loss, fire, water, user error, was it intentional? Was there a physical intruder? What would be the priority of that? Let's say if our emails were disclosed, or tax returns, or tax forms and passwords. This helps you to do a matrix to identify where the information lies, where you may have issues. In this example, priority number 1, we fix these issues, customer contact information. We want to increase security, limit access within the office. Client PII and tax info, find ways to increase network security. Firm PII, determine acceptable use, accountability measures. Paper forms, determine if exposure or availability can be limited inside office. Are they locked? What is marked confidential? What is not? And change locks, consider installing security cameras, etc. This policy should be signed by anyone who interacts with equipment related to the internal network, whether an employee, independent contractor, or the actual owner of the business. So it's a living document that gets circulated. So we talked about hiring a forensic consultant during a data breach litigation. You first want to retain your legal counsel before the forensics consultant is hired. Legal counsel should retain the consultant with no pre-existing relationship. The consultant should be paid by counsel, and those fees should be included in the legal bills. And counsel should define the scope of work to make clear that the work is being performed to assist in the litigation. And you're going to limit that distribution of those reports. And this also helps for public relations. You also can fill out a business identity theft form to the IRS if there's any exposure to that, and you don't need an affidavit. Just remember, these authorities, if you're a practitioner or a business that's not in the tax practitioner business, there are fines and penalties. If you're a tax practitioner, you may have to go through states across the board and also inform the IRS. So, Ryan, we're going to do our last polling question before the conclusion.
All right, here is number 4.
After a data breach, you should retain legal counsel, hire a forensic consultant, contact your cyber insurance carrier. So we'll wait a few seconds. And so we mentioned all of these, and you should, actually it should be all of the above. All of the above. Retain your legal counsel, the legal counsel hires the forensic consultant, and you would be contacting your cyber insurance carrier after you contact your legal counsel. Okay, so in conclusion, trusted advisors and small businesses must take every precaution to ensure the high-risk data that is used in day-to-day activities and that it is protected. Each year, hackers and thieves implement more clever and effective methods of scamming citizens, of scamming businesses, and you want to be ahead of the game. It is vital that a tax practitioner or small business have a written data security plan and perform a regular review of those protocols. And you should make it a priority, educating your staff, clients on proper security steps. Protect your clients, protect yourself. And if Gina want to come back on, if you want to come back on, Gina, we have the links for Techie Geek, who is also involved with this conference. He has live hacking demos, he has data disaster demos, and he has how to recover from ransomware. And he's also offering to the viewers and to the EWC some services complimentary if they want to have him as a consultation.
Well, On behalf of everyone at the SIEDC and our viewers today, Doreen, I'd like to thank you so much for this super informational talk. This is a lot of information and a lot of things for all of us to think about, whether we're CPAs or tax professionals, or if we're just, as you said, people in business who really want to do the right thing and keep things safe. So again, thank you to all. Thank you, Doreen, and have a wonderful afternoon.
Thank you. Be well.